was there anything in this report that should have surprised investors, really? Or is this just a reaction maybe to the expense level?
Yeah, I think there was a bit of a surprise over the past couple of weeks. Momentum, primarily from the buy side, started rising up on channel checks, positive revenue numbers that they were hearing. It hit the numbers across the board from revenues, users, expenses, all hit in line with where I think a lot of the sell side was in the space. But I think it's just that recent momentum that drove the stock up that rose expectations over the past couple of weeks.
So is it partly a matter of we're used to Facebook blowing out expectations, and this time they pretty much just did what they said they were going to do?
That's exactly right. Sometimes good isn't good enough. And this is an example of that, where you needed to be perfect across all metrics. I think folks were looking for something better on the expense side as they were thinking through what was guided towards versus what they thought was going to happen. And they came up a little bit short.
The fact that the slowdown in revenue growth is pulling forward into the current quarter as well. I mean, you've got an outperform rating on the stock. Is there anything there that is going to change your view on it?
No, I think as I look through the short-term levers that they have, they guided down, and I think that's a very kind of conservative outlook as they go forward through the year. You see these ad targeting headwinds. You can't target as much directly as you would like to in the past, and so they're calling out a few of those things. But we go back to the actual products and the actual sets that they have, and you think about something like Instagram Stories. We still see about 50% upside in being able to monetize that. They're just getting started on search marketplace ads. So there's all of these near-term levers that we think they can pull to kind of mitigate a lot of the pressures that they were seeing on the top line.
Stifel's John Egbert also with us. You call these results solid, noted the cautious tone as well. Did anything in this report or the commentary from Mark Zuckerberg shift even your near-term opinion on the stock?
Yeah, I mean, I think there's a lot of products rolling out this year that are pretty interesting for the company. There's a big shift towards privacy forward messaging, and it sounds like they'll have something interesting later this year. But fundamentally, it's still about Facebook. Core Facebook drove most of the impression growth. Instagram, as I heard suggested earlier, has a lot of upside with stories. That ad unit's a little more comparable to Snap, and it just takes advertisers more time to get comfortable with it. But I think shopping initiatives can be a great way to move the needle on that business as well. So I think the core is the most exciting part of this year, but some of these longer-term initiatives could move the needle down the line.
I wonder, I mean, everything we hear is that the core app is getting stale. But is it so solid that do they need to be rethinking it in any way strategically, core Facebook?
I think they've already been doing that. I think the death of Facebook Blue has been a little bit overestimated and a little bit over kind of centralized to us here in the U.S. What they're already doing, pushing through groups and being able to create additional connection points in the application, everything across the dating product that they launch, and even thinking through what they can do with Marketplace and how they can create a growing business out of that. There's just a lot more left in terms of how do you bring back engagement into that Blue app.
John, we have Mark Zuckerberg on the call saying my goal for the next decade isn't to be liked, but to be understood. You have the expenses, the spending on things like security increasing, at least on a year-over-year basis. As we go into another election, how much of a risk is this for the stock and for the performance this year?
It's certainly a risk for the perception of the company and the narrative, but I think they have closed a lot of loopholes and weakness points in the app over the last 2 years. They said they have 1,000 engineers working on privacy alone. That's more than most big tech companies have engineers in total. And so I think they've really done a good job there. They're not going to get a lot of credit for it because of what's happened in the past, but I do think that they are protecting communication better on the platform and getting prepared for those elections. And they've had a lot of testing grounds in other countries leading up to the U.S. election.
Is this going to prove to be the right strategy, this idea of that it's more important to be liked than to be understood? The way they're sort of taking a stance on things like political advertising, misinformation, et cetera, is their strategy the right one?
From a commercials perspective, absolutely. If you kind of hear what they're trying to say. And a lot of it is all about how do I take off being the moderator and being responsible for the content, which has a lot of real cost implications as you go forward. How do I convey that this is a great, safe place for you for your own personal data? If I can convey that message, not only do I bring users back and they feel comfortable engaging and interacting with the advertisements, but I also take off a big chunk of the cost component because I no longer have to be responsible for moderating content.
A lot of people want them to be responsible, John, for the content, and I'm under the impression that part of that higher level of responsibility is what's leading to the expense growth. So maybe you could address that. I'm also curious about your look at Facebook versus Alphabet? Because over the past 12 months, I believe Facebook has still outperformed Alphabet, which wasn't what I would have expected, thinking about how things have been going recently.
Yeah, well, on the Alphabet side, everyone was focused on the U.S. deceleration in 4Q, and I think it's worth doing that because it is a maturing business. But when Alphabet was around $30 billion, which is where the U.S. business is for Facebook, it was growing in the mid-teens year over year, and Facebook's U.S. business is still within the 20% range. So that, the maturing part of the business, that's going to create some comparisons, but I think overall that business is in a really good place.
So, Mark, do you think that Facebook is going to feel compelled this year, especially if you do see slowing top-line growth, or you do see expenses, at least in the near to medium term, continuing to increase, feel compelled to break out some more of its numbers, for example, Instagram users?
I don't think so, and I think the way that they're going, and if you think about how advertisers now spend money on the platform, they're spending less time deciding, do I want to spend money on Instagram or Facebook? And they're saying, Facebook, you've got the best algorithm in the business. You decide where to best show the ad where you think it's going to drive the objective that I'm trying to go do. I think they moved in the right direction, and they hinted about this, of shifting away from Facebook Blue users to platform users.
Yeah.
But I'm not expecting anything incremental over the next 12 months or so.